Ladies and gentlemen, welcome back to the channel. AMC Stock is seeing its cost to borrow rate spiking yet again by over 100% on the day. We have seen this happen a lot in the past, and typically on days if you see the stock down when the cost to borrow rates actually spike, and more specifically the stock selling off into a spike in the cost to borrow rates, you tend to see a subsequent rally coming over the following days. So we'll talk about that correlation and relationship that you are starting to see play out here again. Now, on top of that, you are going to have a very important piece of economic data coming tomorrow, and that is going to be the CPI, the headline CPI, as well as core CPI year over year. But more importantly than that, it's going to be month over month inflation. And like this article says, there could be pain in the inflation report to come, and it could be some bad news. So we're going to get into all of that. We are going to talk about the FTDs that need to be bought back by investors, hedge funds, market makers that are involved with AMC, because again, there are millions of FTDs over the next couple of days, and that will have an impact to AMC share price. On top of all of that information, we are going to be going over the Ortex data as well as the Stocko tracker data and some technical analysis. So we have a jam-packed video for you here today. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section, baby. The Chiefs took it home. The Chiefs took it home. What a very uneventful last minute and a half to any Super Bowl that I've ever seen. But nonetheless, congratulations to everyone that was voting on the Chiefs, and especially gambling. There was a lot of gamblers this Super Bowl, which was very interesting. Now, enough of that. Let's get into it, guys. So for AMC here on the day, cost to borrow max is spiking to 564.5%. Friday's reading was 358%. So you are seeing an increase of about 200%, a little bit over 200% here on the day. And that's important to point out because, yes, we were at 1,000% cost to borrow rate. And really, the course of the whole cost of borrow rates going higher over the past couple of weeks in aggregate, you went from like 20-30% cost to borrow all the way up to 1,000. What happened with the actual share price of AMC during that time? Well, you went from $3 to $7.30. I mean, it was over a 100% increase, and that did correlate with the cost of borrow rates. Now, you have been dropping with AMC, and the cost to borrow rates have also been dropping. This is the first day that you've actually seen the cost to borrow max jump so much, and this is really like a 45-50% jump in the cost to borrow rates just since the last trading day. And whenever that has happened in the past, you have gotten a rally with AMC. Not to mention AMC is on the threshold securities list still, and not to mention that the short interest of free float is sitting at 23%, going up by about 0.38% on the day. 500,000 shares that are sold short here today, down about 2%. Makes sense, kind of in line with what I would guesstimate. The amount of shares currently sold short sits at 118.5 million shares. Cost to borrow average, like I said, 290%. Cost to borrow max, 564.5%, and cost to borrow minimum at a measly 1%. Now, what's interesting about this today is you're not getting any numbers from interactive brokers and the short availability. Last we knew, there was 0 shares available with a 167.5% cost to borrow rate. I would imagine if the cost to borrow max is spiking, then the interactive brokers numbers are also going to be spiking. This makes for a very interesting situation heading into CPI tomorrow. The fact that AMC is on the threshold securities list, and believe it or not, you are holding up a key support level. If we take a quick look at the technicals, guys, just so we don't delay this to the end of the video, AMC did hit that low of 2022 at $3.77. I have repeated to you guys quite a few times, but in yesterday's video especially, you want to watch that 450 level and see if we hold support at that level. And what happened? You hit $4.58 today, and you have rallied almost 30 cents from that low. Considering AMC is less than $5 per share, that was actually a substantial rebound on the day. And if you take a look at this, you've kind of been ramping into the close, in which that's where we're heading, right? You're ramping into the close. That's a positive thing heading into CPI. And on a technical basis, you are holding up key levels of support, and the stock is still up about 30% from the lows that we just seen back here in January of 2023, January 6th to be more specific. So all things considered on AMC, my overall consensus view is that if you wanted to make a long position on AMC, whether it's shares, whether it's, calls, whatever your strategy is, I think this dip just provided you an opportunity to do that. Now, we're going to be getting AMC earnings here in the not so distant future. And I think there's going to be some very positive things to be said about AMC as a business and about the box office, because that's what ultimately matters. Forget who the hedge funds like or don't like, who they're rooting for. Forget all that. If the fundamental picture increases and gets more bullish or gets more bearish, the stock should, in theory, I strongly believe it would react in accordance to that information. Now, you might get that initial sell-off. That's always possible. I'm more so talking on the month or two, right, before, after earnings, more specifically after earnings, because you do tend to get these sell-offs heading into earnings. Like, it's no surprise. AMC sold off back here in February of 2022, right into earnings. After earnings sold off and then went parabolic. Same thing back here the next quarter in May. You sold off into earnings a little bit after earnings, and then you started to rally. Same thing back here, August. You kind of sold off the day before earnings, and then you actually did rally the day after earnings about 19%. So that is interesting. Back here, you sold off into earnings. That was November of 2022. You rallied after earnings. Now you're in that sell-off phase, and I think that does ultimately lead to a rally, especially if the fundamentals do improve. If AMC all of a sudden had no debt and they were $1 profitable, that would cause the short squeeze instantly, at least in my personal opinion. Now, as far as the option activity for the day, 76 orders totaling $24.97 million, positive order value of 2%. So not very bullish as far as the options are concerned. Now, like I said, AMC is still on the threshold securities list with failures to be delivered for tomorrow at 1.4 million shares and 1.3 million shares the day after that. So you are seeing quite a bit of failure to deliver activity that will need to be bought back for this week, and there will be more for next week as well. Now, something taking a little bit more precedence is going to be the inflation report coming tomorrow, and I think it could really exacerbate a lot of these moves in the markets, right? And there's pretty high expectations for inflation, but there's a lot of data that we're getting that does not look good for this inflation report. Now, this article says inflation report due Tuesday has the potential to deliver some bad news. Key points: all market eyes Tuesday will be on the release of the labor market's consumer price index, a widely followed inflation gauge. Economists are expecting that CPI will show a 0.4% increase in January, which would translate into 6.2% annual growth. However, there's some indication that the number could be even higher. The Federal Reserve is determined to keep fighting inflation, so the report could harden their position. So, dude, 6.2%, just at 0.4% on an annualized basis, 0.4% month over month. That's not going to be good, especially if it comes in at 0.5% or 0.6 or 0.7%. You could be setting yourself up for complete disaster tomorrow. Or on the positive note, you are expecting 0.4% of a month-over-month increase. If it comes in at 0.3%, still pretty high, but not quite as high as the market's expected, you could actually get a rally off of that. Now, the data that we have been getting so far regarding inflation in the month of January, or just prices going up or down, I should say, has overwhelmingly been negative. It's been the case that you've seen used vehicle prices going higher. You have seen food prices going higher. You have seen energy prices going higher. Service inflation has not went down at all throughout 2023 and especially 2022. So that's probably going to be high. There's a lot of things that are going to contribute into potentially a red hot CPI report. And considering the stock market is pricing in a Goldilocks scenario, meaning that the markets are pricing in essentially no bad news from here, the Fed cutting rates, the economy avoiding a recession, that's a Goldilocks scenario. Tomorrow we could have a very rude awakening. Now, I've been wrong before, I've been right before. It's really hard to tell when it comes down to inflation and how the markets will react to it, but this one looks more clear-cut than others just because inflation has been falling for so many months in a row. If it does tick up, it's going to scare a lot of people. Now, let's take a look at the economic calendar a little bit more in detail as well, because tomorrow you are going to get, like I said, CPI, and we just went over the expectations, but after that you're going to get Fed Logan that speaks at 11 o'clock in the morning, and then you're going to get Fed Williams that speaks at 2:05 p.m., and that's going to do it. And then on Wednesday, you're going to get more speakers. Thursday and Friday, you're going to get more speakers as well. And depending on what these Fed speakers actually say, that's going to be important, because CPI coming in hot 1 month, that's one thing. But what the Fed does to respond to that is going to be another. And that's where the markets potentially are going to be a lot more fearful. So I think Fed commentary will go hand in hand with the inflation report and help to kind of solidify a down move. Or the Fed could say, yeah, we're kind of seeing, inflation and food and energy tick up. We're not concerned about it. It's probably not going to change policy too much, right? I think that could also spark a very bullish reaction. Now, if you want to play it safe, I would be neutral on the event tomorrow. I do have a slight downside biased just because the markets are so high and they are pricing in just all good news, right? We're not pricing in any bad news coming in 2023. You're in a Goldilocks scenario. 230 EPS on the S&P 500 times 17.5 multiple, which is pretty damn rich for a low growth environment. That puts you at 402 on the S&P. You're trading at 411, 410 right now. That's pretty good. And that would be EPS growth of around 7% for 2023. If you're minus or even the same price that we were last year, or same EPS number on the S&P 500, keep in mind this is S&P 500, the EPS number, 220, that was for last year, roughly what the S&P did. You times that by your earnings multiple, 17.5%. You're at 385 on the S&P in a very short amount of time. I think you have a very wide range here. Your upside is limited, and that is why I do have more of a downside exposure, guys. So S&P 500 coming off the highs just a little bit, kind of seeing a downside move into the close does not surprise me considering inflation data is tomorrow. If we take a look at the Stocko tracker data and go ahead and refresh this page, for this Friday, you're looking at 11,000 calls in the money, 321,000 put calls that are out of the money. You have seen this number explode quite aggressively here today for this Friday, so that is definitely a positive thing rather than not to see. Puts that are in the money, 103,500 puts, 293,000 puts that are out of the money. You've seen a few puts go into the money, a couple thousand, not very many, and you have not really seen any new puts that have been placed that are out of the money. So I would say that is a positive thing, but there is a lot of option activity on the put side and on the call side. It's going to mean a lot of volatility for the rest of this week, especially heading into March 17th, where you have 858,000 puts that are out of the money, 322,000 puts that are in the money. That is over 1 million total put options for March 17th. That could help push us dramatically higher as well. And on the call side, 11,000 calls in the money, 455,000 calls that are out of the money. So I am very bullish from here until, like I said, March, April, May. I think this is the moment in time where you could really get some explosive moves with AMC, and I want to be exposed to the stock to the upside, guys. So that is going to be all for this video. Let me know your comments, questions, or concerns down below in the comment section. Also, if you guys want to throw some thoughts about the Super Bowl down there, I would love to conversate with you guys on that. Now, if you guys want to come trade with me live in real time, all of these major events linked down below in the description of this video. None of this video is financial advice, so don't take it like that. I could be wrong, I could be right. It does not matter to me because we got our long-term portfolios and we are ready for a squeeze when it does happen. So that is it. Thank you for watching, and I will see you in the next one.